In today's video, we'll delve into the top semiconductor stocks that could boost your portfolio in 2024. You might be surprised to learn just how essential these companies are to the tech that powers our everyday lives, from the smartphones in our pockets to the AI that's reshaping our world. So, make sure to stick around as we uncover the hidden gems in this dynamic sector that could significantly increase your returns. Before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Semiconductor stocks have been on a roller coaster lately, with their values bouncing around as investors try to get a clear picture of what's going on in this sector. It's no surprise, the semiconductor industry has become a focal point for many investors due to its crucial role in technological advancements and its significant impact on the global economy. However, with all the attention, valuations for some of these companies have become quite unpredictable. This is where understanding key indicators like the exponential moving average, EMA, relative strength index, RSI, moving average convergence divergence, MACD, and Bollinger Bands can help us navigate this volatility and spot potential opportunities. Today, we're going to talk about 3 semiconductor stocks that stand out in the current market landscape. These companies have shown strong potential for growth thanks to their innovative technologies and strategic positioning in the semiconductor supply chain. While it's essential to approach this sector with a keen eye, especially given the varying valuations and growth projections, these stocks are worth considering for those with a long-term investment horizon. Plus, we'll discuss how using technical indicators can enhance our analysis and make our investment decisions more informed. Let's start by taking a closer look at ASML Holdings, ticker ASML. ASML isn't your typical semiconductor stock. Instead of producing chips, ASML provides the vital equipment necessary for chip manufacturing, making it a crucial player in the semiconductor ecosystem. Think of it as a picks and shovels company. Just like the people who made money selling shovels during the gold rush, ASML profits by supplying the essential tools needed for the semiconductor boom. ASML's claim to fame is its development of extreme ultraviolet (EUV) lithography machines, which are indispensable for making the most advanced chips available today. The company recently launched the world's first high-NA EUV lithography machine, capable of printing transistors smaller than 2 nanometers. This advancement is critical because it enables the production of chips that are faster and more efficient, driving technological innovation across multiple sectors. Despite some concerns about slowing demand and broader economic uncertainties, ASML has continued to post impressive sales figures. In the June quarter, ASML reported $6.79 billion in sales, surpassing analyst expectations. However, it's worth noting that while sales exceeded estimates, earnings did fall short, decreasing by 21% year over year. For investors, using the relative strength index, RSI, here could help identify if ASML is overbought or oversold. If the RSI is above 70, it might suggest a pullback, while below 30 could indicate a buying opportunity. Also, keeping an eye on the exponential moving average, EMA, can provide insights into the current trend direction. If ASML's price is above the EMA, the stock might be in a bullish trend, while below could indicate a bearish phase. On one hand, the company's revenue guidance for the current quarter is set at $7.66 billion, which is lower than analyst projections of $8.24 billion. But even with this tempered outlook, ASML is still expected to show growth compared to last year's $7.03 billion for the same quarter. Additionally, Bollinger Bands can be useful in spotting volatility and possible breakout opportunities. If ASML's stock price hits the upper band, it might be overbought, suggesting a potential reversal or pullback. On the other hand, if it touches the lower band, the stock could be oversold, possibly indicating a buying opportunity. One reason ASML remains a valuable company despite these fluctuations is its unique position in the market. Its EUV lithography technology is essential for producing the latest and greatest chips, and this technology's importance is unlikely to diminish anytime soon. Combining this fundamental insight with the moving average convergence divergence, MACD, can help us identify momentum shifts. A bullish signal is generated when the MACD line crosses above the signal line, while a bearish signal occurs when it crosses below, helping investors time their trades more effectively. But before we proceed, here's a question. If you could only pick one semiconductor stock to hold for the next 5 years, which one would it be and why? Comment your thoughts below. Moving on to our next pick, Taiwan Semiconductor Manufacturing Company, ticker TSM, or TSMC for short. TSMC is not just a big player in the semiconductor industry, it's the largest contract chip maker globally. The company has become a cornerstone in the supply chain for tech giants like Apple, NVIDIA, and AMD. TSMC's expertise lies in manufacturing chips for other companies, which allows it to capitalize on the growing demand for high-performance computing and artificial intelligence. Over the past year, TSMC's stock has surged, reflecting the company's strong performance and the market's optimism about its future. In July, TSMC reported a 45% increase in revenue, driven by robust demand demand for its advanced chips. Analysts predict that TSMC's revenue will continue to grow at a rate of around 37% annually, which is quite impressive considering the scale of the company. For TSMC, using the RSI and Bollinger Bands could help investors decide when to enter or exit a position based on overbought or oversold conditions and potential volatility. Additionally, tracking the EMA for TSMC can help confirm the strength of its upward trend, ensuring that investors are not caught off guard by a sudden reversal. One of TSMC's key strengths is its leadership in developing cutting-edge chip technologies. The company is renowned for its 3nm and 5nm process technologies, which are critical for creating smaller, more powerful, and energy-efficient chips. These advancements are essential for powering everything from smartphones and laptops to data centers and autonomous vehicles. As the world becomes increasingly digital, TSMC's chips are poised to play a crucial role in enabling the next generation of technological innovation. TSMC's leadership in the market is also bolstered by its significant investments in research and development, enabling it to stay ahead in the technology race. This focus on innovation has allowed TSMC to consistently deliver cutting-edge products that meet the evolving needs of its clients, making it a critical partner for companies looking to push the boundaries of what's possible with technology. By watching the MACD indicator, investors can get a clearer picture of TSMC's momentum. When the MACD crosses above its signal line, it could be a bullish sign, indicating the stock may continue its upward trend. Conversely, if the MACD crosses below, it might be time to reassess or hold off on buying. However, it's not all smooth sailing for TSMC. The company faces significant competition from other chip makers, and there are concerns about geopolitical risks, given that TSMC is based in Taiwan. Moreover, the high demand for chips has led to supply constraints, which could impact the company's ability to meet market expectations. Despite these challenges, TSMC's strong market position and technological leadership make it a compelling choice for investors looking to tap into the semiconductor sector's growth potential. Finally, let's talk about NVIDIA, ticker NVDA, a company that has become synonymous with innovation in the semiconductor industry. NVIDIA is best known for its graphics processing units, GPUs, which have become the gold standard for gaming, data centers, and artificial intelligence. The company's products are at the heart of the AI revolution, making NVIDIA a key player in one of the fastest-growing segments of the tech industry. Despite a recent dip in its stock price, NVIDIA remains a favorite among analysts who see significant upside potential for the company. According to Mizuho, NVIDIA's robust market position and strong demand for its GPUs could lead to higher chip prices, driving revenue growth in the coming years. The firm has set a price target of $132 for NVIDIA, forecasting a 26% increase in the stock price. For NVIDIA, using technical indicators like the RSI and Bollinger Bands can help determine optimal entry and exit points, especially in such a volatile sector. The MACD is also valuable here, offering insight into the stock's momentum and potential trend reversals. A strong MACD crossover above the signal line could indicate a good buying opportunity, while a crossover below might suggest caution. However, NVIDIA's valuation is a topic of debate among investors. The stock is currently priced for perfection, with a high price-to-earnings ratio that reflects expectations of continued strong growth. Using the EMA can help investors gauge if NVIDIA's current price aligns with its trend. If NVIDIA's stock price is above the EMA, it's a sign the trend is bullish, but if it drops below, it might signal a downtrend. Looking at the table, we can see distinct characteristics that set each of these semiconductor stocks apart. ASML Holdings boasts a high current price and a solid gross margin of 51.44%, reflecting its premium position in the market with specialized equipment crucial for chip production. Taiwan Semiconductor, TSMC, with the largest market cap of $884 billion and the highest revenue, showcases its leadership as the world's biggest contract chip maker, complemented by a healthy dividend yield of 1.2%. Meanwhile, NVIDIA stands out with a remarkable gross margin of 75.29%, highlighting its strong profitability in the high-performance computing and AI sectors, even though it doesn't offer a dividend. This diverse range of metrics underscores the various ways these companies are positioned in the semiconductor industry, offering multiple avenues for potential growth depending on your investment goals and risk appetite. So, what's the takeaway here? Each of these semiconductor stocks offers a unique investment proposition. ASML Holdings provides essential equipment for chip manufacturing, making it a key enabler of technological advancement. Taiwan Semiconductor is a leader in the contract chip-making market, with a strong track record of innovation and growth. NVIDIA, on the other hand, is at the forefront of the AI revolution, with its GPUs powering some of the most exciting developments in technology today. When considering these stocks, it's important to weigh the pros and cons of each. ASML has a unique market position, but faces challenges related to demand fluctuations and high valuation. TSMC benefits from its leadership in advanced chip technologies, but must navigate geopolitical risks and supply constraints. NVIDIA offers tremendous growth growth potential but comes with a high valuation that assumes continued strong performance. For investors looking to add semiconductor stocks to their portfolio, these three companies are worth a closer look. They each have strong growth prospects and play a crucial role in the semiconductor supply chain. By understanding the strengths and weaknesses of each company, investors can make more informed decisions about which stocks align with their investment goals and risk tolerance. But before we wrap up, here's one last question. What's the most underrated stock in your portfolio right now? We'd love to hear your thoughts, so drop a comment below. If you enjoyed this video and found it helpful, please give it a thumbs up and consider subscribing to our channel for more content like this. Remember, the information provided in this video is for educational purposes only and should not be considered as financial advice. Always do your own research before making any investment decisions. Thanks for watching, and we'll see you in the next video.